that I will put some money of 100 crores into it and therefore the world will believe. These things, and
the calculation,
like ILFS.
Well, the calculation
ILFS went overnight.
I agree with you. I agree with you. We could have, I mean, now you're pointing out to several linkages, other private banks, small private banks, as well those who are holding senior debt, 81 bonds, all of them will have questions on their head. But Samir, I mean, what is the preference for SBI absorbing it? Most of the brokerage reports are that it would be better if it is kept a separate entity. Their calculation, one minute. Their calculation is that 25,000 crores is Yes Bank's net worth. If 25,000 crore of, double B plus or whatever their bad debt is taken off, then a further about 30,000 crore is needed to capitalize it. Is that the way we should think about Yes Bank?
I was thinking, see, previously the bank was trying to raise $2 billion on the basis that you don't have to solve the entire balance sheet problem in one day.
Yeah.
You have to basically give it maybe $2 billion and then over time it earns its way out of trouble for another 3 years. So another 3 years returns would be zero for whoever was to put in that $2 billion.
Yes.
So, the thing is that if it is kept separate, there's an advantage that the liability of SBI and all is defined. The question is, are you willing to give $2 billion or are you saying that we'll just take it over and we will manage it? But somebody has to take a hit of $2-3 billion.
Yeah, that $2-3 billion has to be taken.
Yeah. So the point is, at a country level, what is $2 billion? You can make money. We have done it in the past.
Yes.
The government is sitting on profits of those footy shares because they took them over.
Yeah.
Fair point.
And then the market will rally after 1 year, 2 years, 3 years, whenever Yes is back on track and change its name and make money.
Yeah.
But at this point to say we don't care, it's a private company, it has to find private solutions. I hope they don't do the same thing with the other company which is facing bankruptcy, which is the telecom company.
Yeah, it's a valid point. I mean, it could have been done 1 month back, and perhaps 4 or 5 banks putting some capital. Samir, so two-part question: what happens to State Bank of India, and do you think stronger banks like HDFC Bank and Kotak Mahindra Bank would become? Would see buying once again?
I just saw your thing before this. The point is, in the long term, yes, but we have realized there was another trend we played for so long that unorganized will lose to organized. But what happened is when the unorganized lost so much, they brought the whole system down for the last 2 years. So it is true that in a pie, somebody will benefit, but you can't hurt the pie size so much that it doesn't matter that HDFC Bank is outperformed, but everything is down. And we can keep saying that 3 years later they would emerge even stronger. The point is, time is money in this world, and not just for investors, for job seekers, for everybody, for economy, for catching your targets. Every year we cannot waste on the basis that next year we'll be stronger because it'll be thinner and all that. That's what
Samir, how are you reading the global market? Do you think this is going to continue for a bit? I mean, the reaction looks outsized on Wall Street compared to the problem that coronavirus can create.
Actually, in US it is not outsized, because if you look at it, this week, every day it has gone up or down 2%. But till today it is up 2% because it goes up 4 and loses 2. Very different from our market, which loses 4 and then next day loses 2 more. So the US market, if you see, has massively outperformed. Of course, China has outperformed everybody.
Yeah.
But on Corona, we had thought that maybe it's a 3-5 month problem, and by the time the quarterly results are bad, and if that time it's contained, people will move on. That one is more difficult, and you can't blame anybody. But this one is like really shooting yourself in the second foot, because the first foot you already shot. So it's not even that. This one is unnecessary beyond normal, I think. So it's a bit more frustrating.
Samir, we're getting a lot of queries on our social media platforms. The most common one is, will I as a depositor lose money if I have money in Yes Bank? Now, if you go by past acquisitions, whether it was OBC's acquisition of GTB or even ICICI Bank's acquisition,
I don't think they
won't. Okay, yeah.
Because in the budget, if you saw the budget, Mrs. Nirmala Sitharaman said in the budget, I think it was aimed at Yes Bank only, because she said that all, I remember this, I think it was broadly, you can check, but it said all deposits of scheduled banks are safe. And that itself meant to me that day that Yes Bank is about to go under, because there was no reason to bring that line into the budget. But the bottom line is, she said it, and also it says in the press release or whatever, the RBI, whoever.
Yes.
So I think that is okay. I am talking about the non-deposit holders, which are not few and not some fraudsters of the world. They are also Indian companies and Indian system.
So collateral damage, Samir, in terms of slowdown, so can we be looking at the markets making 52-week lows and even trading lower then?
See, I don't even know. Where is it relative to 52-week? I don't know.
10,600 thereabout on the Nifty.
Was the 52-week low?
Yeah.
You might get it also, but my point is in general that, you have delayed whatever good things are happening by maybe 3 months or God knows how much. But maybe in one sense it is good that it's all mixing up with Corona, so you don't really know the difference of one versus the other. But otherwise it's unnecessary. We shouldn't do this. And main thing is, I'm saying that it's a philosophical thing. So somebody has to explain to the government that philosophically, the fact that you distance yourself from a private sector bank on the basis that it is moral hazard is not fully correct. Because the moral hazard, the equity guy anyway would lose everything. Anyway the stock has to be 0 or 1 rupee. But the other guys didn't do any, speculation or aggression that they should be penalized to punish them also for going and opening a bank account with Yes Bank.
No, point taken.
A line from Yes Bank.
Point taken, Samir. It's, yeah.
The aggressive management is out and the shareholders are out or should be out.
No, I take your point. Bear Stearns was bailed out immediately or asked to be taken over by another bank. Lehman, they did not, thinking it's a moral hazard and paid the price for it. So you really don't know at what point you have to take that discretionary call. And on hindsight, maybe things would have been very different. Take your point entirely, Samir. This is going to be a difficult next 2 months, I guess, for the markets. Thank you very much for joining us. We will need your advice again and again.
Okay, well, from one queue to the other queue that we have to deal with is the weak global queues. Richard Harris is now joining us, Chief Executive at Port Shelter Investment Management. Richard, hi, good morning.
Morning.
We're all trying to understand if this is some kind of a start of a bear phase in the global equities, and has the US bull market actually ended? What would be your thought?
Well, of course, this is the key question. I mean, in a sense, you almost have to put it into probabilities, because to my mind, I think there's a pretty high probability, maybe over half, that we have seen the highs for this particular cycle. And it's coronavirus that's brought it on. On the other hand, it may be that the coronavirus will fade away, or that medical authorities may say it's not as critical as we thought it was, and we'll all be back to work within a week or two. So it really very much depends on that at the moment. When I'm putting money on it, I'm sort of saying that I think this is actually time to go risk off, raise a little bit of cash out of equities, put money maybe into the bond market where you still have yields, and look for equities that might actually do particularly well in this situation, like farmers, and I would hold on to the tech companies.
Okay, so you do think that this, what is a 10% correction, could become a 20%er?
Yes, I mean, if you're looking globally, we've obviously had some recovery on Wall Street. That's not unusual at this sort of stage of the market to have, say, 2 very bad days, a strong recovery day, another bad day. Friday is usually quite an important indicator. Last week, the Friday was quite bad and the market recovered a bit on Monday. But you can't really rely on what news is going to come out over the weekend. So if we have a bad Friday today as people maybe equalize their portfolios, flatten them for the weekend, then that could set the scene for something different on Monday. So it's very much news dependent at the moment. But to my mind, yes, this is a risk-off situation.
Okay, this is a risk-off situation. Richard, hi, good morning. What are your views on India now? Because there's incremental bad news here. We have a big bank, Yes Bank, that has been put under moratorium. So that's sort of left depositors in a bit of a panic situation. At this point, how are you approaching the Indian markets?
Well, obviously, the situation with Yes is quite serious, and it does have slight faint overtones or rhymes with what happened in 2008 in the US. It's clearly a negative sign. I think most of the banks around in the major Western markets, such as the US and Europe, had a really big scare during the global financial crisis, and most of them now are quite well capitalized. But of course, there are big questions hanging over Deutsche Bank, and clearly in some other markets like Yes, And indeed, in China, people haven't necessarily learned the lessons of shadow banking, investing too much with one particular group or individual, having too much counterparty risk. And these things will happen as soon as there's a little bit of a wobble in the markets.
Okay, so how do you approach Indian markets now? For fear of this collateral, are you going to keep off? Is there a pecking order for markets and within the emerging market basket?
Well, I think the problem is at this stage of the market, you tend to get the emerging markets really falling in line with markets elsewhere. So if the US is concerned, if Europe is falling, then it's very difficult for emerging markets actually to move ahead. There's still a big question about where the virus is going to go and how that's going to be handled in emerging markets. And I think what tends to happen is emerging markets tend to be put into the same bucket, even though they generally divide into two, oil producers and oil users. And that often means that emerging markets don't move homogeneously. This is the one time when global markets do tend to force emerging markets to move together. So I think the general view, certainly on a risk-off situation with international investors, is their view is going to say to stay out of emerging markets, at least not to put more money in, and maybe even to raise a little bit of cash here and there.
So what's your base case about India now? Are we staring at a bit of a bear market, the start of a bear market in India, or not quite yet?
Well, I think the thing to remember is India, apart from last year, India has had an extremely good performance of its equity market, going right back through to the crash itself. It's been one of the best performing markets in the world. To lose a little bit now shouldn't be seen as a disaster. And I think that's the same in the US as well. If the markets come off 20%, you have to look at it in the light of the fact that the markets have gone up 30% in the last couple of years. So we still need to be fairly calm about this. And also to say that, even if we do end up in a bear market, 20% down, long-term investors will still be sitting on a lot of profit. Now, that's tough for the guys who Johnny-come-latelys and have come in rather late in the day. But I think one still needs to keep a perspective on these things.
So this morning, it looks like the Nifty will open about 350 points lower, below the 11,000 mark, maybe 10,900 thereabouts. Is that a time you will buy India, or is this still a falling knife?
Well, I think, having been in these situations before and thought, oh, this has got to be the bottom, it's very easy to catch the falling knife and get hurt. I think there's still plenty of news to come out about coronavirus. If we see one or two other clusters, as we see in Italy, as we've seen in Iran, as we've seen in South Korea, there will be more restrictions on trade, more bilateral controls on people moving, and that's obviously going to be very bad for the markets. The one thing about India is it does have a strong domestic market, but clearly global industries are going to come under some sort of pressure. And what we're seeing with Yes today is classic. Unfortunately, banks are too big to fail if they've got depositors' money. Lehman was probably right to go because it was an investment bank. But where you have a bank with a lot of depositors' money, is no choice for the government to step in.
All right, Richard, thanks for joining us. We've run out of time, but thank you for your thoughts. That's Port Shelter Investments saying that this is a time to be risk-off equities because you don't know which way issues like coronavirus could head. It could drag down markets further. Let's take a quick break on that note. Our list of top 10 stocks lined up and lots more coming up on Yes Bank, so don't go anywhere.